Hello, everyone. It is January 4th, 2026, and the U.S. Special Forces have captured Maduro in a Caracas raid and taken him back to the United States. And what does this mean for the oil market is kind of what I want to talk about. So there's been a lot of interesting takes on on Twitter. This is the first wild one. Venezuela has 303 billion barrels of crude oil reserves. PDVSA letters saying that they're worth $17.3 trillion at $57 a barrel, which is actually completely wrong. And simply because getting this oil out of the ground is not just turn on the tap. They have a bunch of old infrastructure, and they need a substantial amount of capex to actually get it out. Chevron seems to be the front runner in all this because they already have permitting and kind of backing from the U.S. But a lot of people are calling for, where was this one? Yeah, sub $50 a barrel by Monday. You know, people are calling for this crazy crash in oil, which might happen. But for me, any big move in this is just a fade. Because what this means is, sure, the U.S. has gone in and subverts the leadership in that country, but historically, whenever they've done this, literally every single time the country's kind of gone into disarray and it hasn't been stable. And so if you think Chevron is going to be putting tens of billions of dollars into bringing this infrastructure and bringing this oil play up to speed when oil is already at $57 a barrel and capex is being cut across the board, then I got a bridge to sell you. And the reality is, so here's the raw demand, or sorry, not demand, the raw supply numbers. Venezuela's oil production was around 1 billion barrels a day this year. So even if you see that tens of billions of dollars go in, you're not going to see that this year anyways. You're going to see it in the future. And the number I'm seeing is that they might be able to bring it up to 2 billion barrels a day, maybe 3, of which it needs heavy refining and it's really expensive. So at $57, it kind of goes back to the previous video I made where are you going to spend $100 billion on a risky political climate just to have infinitesimal margins on crude? Maybe, if you're backed by the administration, like there's an argument there. But that doesn't seem very likely until things are much more stable in that region. So what does this mean for the oil market? In real terms, it means absolutely nothing today. But it's something to look for in the future. For example, Canada, the crude source in Canada. Canada sends, we're a huge supplier. I'm Canadian, so we're a huge supplier of crude oil to the States. And so the southern supply will be affected. But the majority of Canadian oil will still be bought by the States because, first of all, that oil isn't going to be coming online. And second of all, it needs to travel. And so the infrastructure to bring that crude oil way up north isn't there. It's more of a Gulf situation. Excuse me. But the market will do what the market wants. And so it's good to have a plan either way. In general, my base case is this is a fade. So let's say tomorrow crude, goes up to $66 for some reason because everyone thinks it's super bullish and it's on the headlines now. That's a sell. I think that's a fade. Conversely, if we get a nuke in oil, that's a buy. And I think I'm more interested in a nuke. I would love to see just like a massive spike down. I mean, that's a buy all day to me because the barrels aren't coming online and it's just a headline play. And the underlying trend, like my base case bullish, is still there. And then we can take out all of this liquidity. I also see an opportunity in a spike. The reason I like the spike down better is because it'll flush a lot of liquidity, like a lot of longs, and the positioning right now in crude is incredibly short. And so you'll see a lot of people take profit in the bottom where I see a really quick reversal possible. The other play would be Chevron, so I'm not sure why it was disconnected. Chevron's already at resistance, and ironically, well, not ironically, it's kind of the meta now with all the front running of things and insider trading and stuff, I guess. we've had this consolidation near the resistance. So Chevron was kind of poised for a move up already structurally. So because of this headline situation, I can see Chevron doing a super candle. And I think once you get any sign of slowdown or anything, it's a fade. It's a fade back down to support. So for me, I'm looking for a flush in crude. I'd also be interested in a flush in Canadian oil equities, like OBE could flush. Like if we see OBE flush to here, I think that's a good buy. Pretty much anything with a really aggressive move down, I'm gonna be monitoring. So I'll probably do a video tomorrow when the markets are live, and I'll see. But yeah, that's my take on Venezuela. I think it's a nothing burger, but the headline I think will move the markets. I also think it's bullish U.S. dollar. I think this could be a higher low situation that could bait a lot of people, because having the U.S. military back your financial interests is anything but bearish. And here we go. We have the cross on the daily at the low RSI, cross on the trend line. So if we use our fib sequence, I could see this easily going up to this region for a higher low. This would be the perfect catalyst. And again, I think it's a fade. I think you fade anything off this headline, because even if it did materialize, it's going to take tens of billions and many years. So, and so I really like a higher low on DXY, and then we should continue to the lows. So we'll see what happens in 4 hours. Let me see gold, silver. I don't know how it's going to affect gold, silver, but those are the three I'm watching. All right, let's see what happens. Let me know in the comments what your opinion is, and if you follow oil and gas closely, what your thoughts are, and what positions you're taking.